Hi, I'm Joe Guinan. I'm sitting here with market strategist Andy Busch, and we're going to ask him a few questions about what's going on in the economy and what's going on with Fed policy. Just want to comment a little bit, or hear your comment a little bit on the global economy. We have this dramatic price drop in oil, and two of the biggest oil importers are Japan and Germany. Two of the economies we would most like to stimulate would be Japan and Germany. So isn't this sort of a perfect confluence of events? The drop in oil, Germany and Japan will get an economic boost, and that will help the world right where we want the world being helped. Instead of just U.S. growth pulling the whole world up, this oil price drop should help Germany and Japan recover substantially. Is that overreaching, or what do you think?
Well, let's look at who are the big oil importers, big energy importers. You mentioned Japan. Obviously, ever since the nuclear accident there, they've been drawing in coal and liquefied natural gas, whatever they can get their hands on. China's another big importer of energy, and so's India. India's been really, if you look at their stock market, they've been doing really well under the new Prime Minister Modi. A lot of that has to come with anticipation of changes there, but also that dramatic drop in price is like a tax cut for everybody. It's especially helpful for the middle income guys because they spend more of their money, more of their disposable income on energy and things like that. So for that large group, it's fantastic. You're starting to see their spending go up, and that's very, very helpful, not only in the United States, but also in parts of Europe too, where they haven't taxed energy to the nth degree. We all know that their gasoline or petrol prices are so much higher than they are in the United States because of those taxes, but also in places like Japan. So these are good things. It's almost like a global targeted tax cut to help middle-income consumers, which is fantastic. Now, it's a question of how long we stay at these levels, but I really believe that even with the number of shale rigs that are coming off, this is a much different game than what we've experienced before with oil, because we have seen the world shift from the Middle East as far as being really the swing producer. Saudi Arabia still is. They can flip a switch and pump more. But now, in the United States, we pull these rigs off, but within 6 months, we can get about half a million barrels per day back online, and within a year, we can get 1.5 million barrels per day back online. So it's much more like a mining effort than it is an oil production effort. It doesn't take as long to get it going. So that's the good news. So I don't see, or I don't foresee, oil going back above $80 anytime soon unless the entire Middle East blows up, and I don't expect that to happen. So we're probably in a broader range of maybe 35 to like 65 for a little while here. But great point. Yeah, I think it's wonderful for those economies, and they'll continue to benefit from it.
Yeah, and I agree with you on the outlook for oil price. I think that's the wide range. Well, thank you very much. This is Andy Busch, market strategist. I'm Joe Guinan from Advantage Futures. Please visit our website at advantagefutures.com. Thank you.